Hey guys, Mike here. So, oh boy, what a loaded week we have here coming up. And I mean, I can't even stress that enough. The earnings, which we're going to get into and show you, I mean, there is so many major companies reporting this week. It ain't even funny. The economic data, day after day, is just an abundance of it, let me tell you. And the one thing we know for certain this week is it's going to be super volatile. I mean, you don't need to go to Disneyland or Six Flags or any other amusement park because the market is going to provide you that feeling this week. I think every day it won't surprise me to see 1% to 2% swings, maybe even bigger than that. I mean, it is just unbelievable. The biggest question we're going to see, and we're going to get to find out this week, is the market, will it stay detached from what earnings are saying and then what the economic data is saying as well? That's really the big factor we're going to get to see this week. Because if it ignores it this week, and if earnings come to be great, then it'll probably listen to it. But I'm saying if earnings continue to come in, they keep missing, and then the expectations going forward aren't that good, and they continue to stay disconnected, that's really the big question. But, we're going to go into the charts real quick. Some stuff did happen that I want you to know about. And then there's two other things to pay close attention to, and we're going to see how this is going to affect the markets. I want to get your opinion on it. But if we look real quick, you can see the cues, what we're setting up for this week. Obviously, breaking out of this chop box, there's a gap right above that, around like 3.8 to 3.10, I believe it is. There's that trend line I talked about to see if we can get above it, retest it. And then, of course, that gap happens to coincide with the golden pocket, 618 to 6.5 area. And it's always love when they coincide like that together. Again, the RSI is starting to get into overbought territory if we continue up this week. And again, another thing to look at too, this is a 30-week moving average on the weekly chart. And you can see it's been basing out. So it is trying, it's getting above that 30-week moving average now. And it is trying, that 30-week moving average is trying to curve up and start heading north, which, again, it's starting to get that stage one, trying to maybe see if this is going to be a stage two. Obviously, we'll have to see how that goes. The RSI above 50 on the weekly, that's always bullish. And then if you go into the S&P, you can see right there, there's that golden cross. It's so close to happening, right? The 200 is trying its best to flatten out. 50 is heading up. You can see it broke out of that triangle there. And there we are at that major double top support / resistance level. Everybody's watching. Again, this one on the weekly, you can see the 30-week. It is above that 30-week moving average, which is flattened out, starting to head upwards as well. RSI above 50. And of course, there's that major resistance level. Everybody wants to see if it can break above. Now, what just had a golden cross? Well, look at that. IWM, Russell 2000. It had it Friday. Now, does that mean anything when it comes to the Russell? Believe it or not as much as it does on the other indexes. And what I mean by that, it's the only one I could find where there's actually multiple golden crosses in bear markets with the Russell because of the way the index trades. The other indexes just drop off a cliff and then they'll come up. The Russell, as I've showed you many times, they'll actually trade right sideways in a chop box for a long period of time, and then it'll either drop down or drop up and then just trade sideways. So those moving averages stay a lot closer and take less time to actually cross than the other indexes. And so that's why I went back at .com, 08, several other instances, and then multiple golden crosses for the Russell. The other ones only had one. Now, of course, if we do have one on the S&P, finally get one on the NASDAQ, I was shocked to look at the Dow, which I don't even talk about. That one's actually farther away than the S&P. Remember, the Dow's been on a tear the last 3 or 4 months of 2022. So I was very surprised to see the S&P is probably going to have one before the Dow. But again, could this be the first year we have a golden cross and everybody goes great, and then all of a sudden it sell off again and have a death cross again? Could be. I mean, it'd be the first, right? Since the 1970s at least. I know that. I went that far back. But, we'll have to see. The other, obviously, chart to pay close attention to, which everybody will be watching, is Tesla. And Tesla, you can see, is approaching a critical level around the 180 area, which you can see has been support resistance going back to late 2020. And if we go over there, you can see multiple times where it was support. So can it flip that? That is a very big question. And another thing, let's just add in an anchor VWAP here from the COVID lows. You can see those are coinciding. It's sitting right up against that anchor VWAP and that 180 level. It has been on an absolute tear. So there's a lot of momentum there. Another thing to look at too is you got this gap sitting around 190 to 192 area right there, which is only like 6% away. And Tesla's been moving double digits the last 2 days, so that's not really a big thing. If it breaks through that 180, it's going to fill that gap pretty fast. I really believe that, no doubt. But what you're looking at is to get some kind of go above and finally get some kind of consolidation here where you can start building out support levels. Because right now it's just basically going straight up, it seems like. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit that like and think about sharing the video, guys. And as always, guys, appreciate your support. And yeah, I'm gonna ask for something else from you at the end of this video, okay? Because I found something out that YouTube did. Now, the other things we got to look at here. One is what's going on in the bond market, because supposedly pension funds are going to be doing something here, and this is what we got to pay close attention to. And then we're going to go into what insiders are doing. And you definitely want to see this because it actually really surprised me in a way. But supposedly, JP Morgan says that pension fund managers are going to start having to de-risk, and so they're going to buy about $1 trillion in bonds. Bank of America says, nah, it's about half that. They'll buy about $500 billion. $500 billion to $1 trillion seems like a lot of money to me. Maybe it's not to them, but again, this is money that's not going to be going into equities. You can see right now, bonds in 2023 are actually outpacing stocks right now, which, I mean, of course they are, because it's almost risk-free depending on what kind of bond they're going into, but they're paying higher than they have in just years for that matter. And plus, this is a pension fund, right? So these people need their money. They tend to be less risky in some ways, even though over the years, as I showed you, they've been way more risky. And so, but this is the first time in a long time where they can actually make quite a bit on bonds. Because you got to remember, they manage trillions of dollars, right? So imagine if you're buying, let's say, $1 trillion in bonds, and it's paying out. I don't know which one they would be buying, but let's say it's just 4%. That's a lot when you're putting $1 trillion in. Okay, it doesn't seem like that. And remember, these are pension funds, so they don't need to be super risky here. These people need this money, right? And so that's something to be interesting. How that's going to affect the market is what I want to see, because a lot of these pension funds will, and plus not only them, but other funds will buy bonds instead of stocks. We'll have to see how that's going to affect it, because it is less money rolling into stocks and crypto and stuff, right? And then the other one, and this chart is just stunning to me, is what insiders are doing right now. This is the insider attractions ratio, right? Above the line is bearish, below the line is bullish. Well, as you can see, the ratio right now is 38. It is, and anything like 20 to 1 is considered really high. Look at that thing. That is way above. They have been selling like crazy up in this rally, more than they have the entire year. So let me know down in the comments what you think about that, and have you been selling into this rally or not? I mean, these stocks, like, what was Tesla up 75% since it hit its low this year? And so, and a lot of, Nvidia's up just massive. So many of these stocks are just up huge, and that really is, kind of leads us into earnings, right? Like, how much already is priced into all this stuff, right? The market likes to get ahead of stuff, whether it be bad or good news. So how much is priced in? We've seen this before, where you see these big run-ups or a big run down, and then the event happens, like, it's kind of like the market don't really react too much. Or maybe it's a good event and the market still sells off, and you're like, what the heck just happened, right? And so that's really the question. Another thing we're going to find out this week for sure is how much is priced in to either good earnings calls or bad earnings calls, right? How much is priced into the FOMC, because 25 basis points, I think it's like 100%, everybody's got this figured out, it's going to happen. And so it's really about what he's going to say. And let's be honest, what new can the man say, right? He gives the same speech every time, data dependent, right? We still got work to do. Job market still hot, economy still strong at this point in time, even though the manufacturing don't look good, but services, yeah, people were still spending on the stuff, and so that's the way it is. And I'll show you some of that tomorrow, because I got Visa and MasterCard's information on their transactions and stuff. And so, going into earnings, like I said, this is loaded. And you can see Monday, the only real big one to speak of is going to be SoFi. That's a pretty popular one amongst retail investors. And there's some other ones in there. But really, it starts Tuesday, right? ExxonMobil, I'm pretty sure we know what they're going to say, right? They're making a lot of money. UPS, GM, Pfizer, Caterpillar, McDonald's, Spotify, two more oil companies, Corning, which actually people think that's actually going to do really good this week because of the chart, but check that one out. AMD, that's going to definitely tell you where semiconductors are going. I put Snap in here just because it got destroyed the last two times. Does it finally make a huge rebound since you've seen other garbage stocks absolutely run up off of nothing right now? AMGM is going to be another one. Then you go into Wednesday, waste management. A lot of people will look at that one because that's a lot of value investors' picks. But then the big one, after hours, Meta, right? And this has had a huge run up since it got destroyed. And it's been just nuked on the last two earnings, I believe it is. Then you got Thursday, you're going to have ConocoPhillips. Lilly's a big one. Honeywell. Are we buying chocolate? I don't know. But then, of course, after hours, the three big ones, excuse me, Amazon, Apple, Alphabet. Then you can have Ford, Qualcomm, Starbucks. A lot of companies setting new 52-week highs here. And so Friday, don't really see anything. If you like Cigna, you can look into that one. And like I said, the data is abundant, right? Monday, the big stuff is going to be the Dallas Fed Manufacturing Index. Manufacturing has just looked abysmal. You can see the previous and the forecast over there is terrible. Then you go into Tuesday, a lot of employment stuff coming out. Then you're going to end up having the Chicago PMI, which people will definitely be watching on that to see if it's still coming down. Then we're going to end up going into Wednesday. This is the big day. Mark this on your calendar, okay? You're going to have a lot of stuff about mortgages, ADP employment changes. ISM manufacturing PMI is going to be big. The JOLTS job report, is the market still hot? ISM manufacturing employment. Then the big one, 2 o'clock, the Fed interest rate decision. Like I said, everybody's expecting 0.25%, and then just listen to some hawkish talk and see if that can even affect the markets at this point in time. And we'll talk about more than that in just a second. Thursday, you end up, initial jobless claims. Again, a lot of stuff about productivity and labor. We'll see on that one. And then Friday, everybody always watches the non-farm payrolls, unemployment rate. Boy, it's 3.5 previous. The consensus is 3.6. I mean, that's still super hot. And then you're going to get the earnings month over month and year over year. So people will be watching that. The S&P Global Composite Index. And then, of course, ISM non-manufacturing PMI. Whew, that was a mouthful. I mean, you see what I'm talking about when I say it is just a loaded week. And you're going to see a lot of ups and downs all over the place from certain companies and everything. We will get to find out if the market is just staying totally disconnected from whatever's going on. But again, the market will go as Apple goes, right? If Apple, which, I mean, you got to think, look what happened to Microsoft. They didn't even have good earnings, didn't have good guidance, stocks up, right? So Apple is the market. So can you just imagine the market actually selling them off or them even having a bad quarter? And a lot of times they don't even give guidance. So you can't knock them down for that, right? Because they just don't do it anyway. It's kind of a smart move. And they know they're the market. And so that's, again, if that goes up, everything's going up. Doesn't matter at that point in time, right? And then with the Fed, what are they going to do? The only thing they can do to shock the market is do a 50 basis point hike. They haven't shocked the market at any point in time. They've telegraphed every move they've made by leaking it to the press and everything else. So, people just didn't want to listen to them. But that's probably what's going to happen is 25 basis points, right? And then what can he possibly say that's going to make the market go, oh, they're serious? What else can the man say at this point in time? And the biggest question is, do the reporters finally step up and actually ask real questions? Like, hey, how come, the market's running away and you've lost control of your narrative and the market, and now commodities are running up? How do you think that plays into what you're doing here? And so, again, I don't think the market at this point in time believes that they're going to hold, these rates higher. And I'll show you something more to kind of show you what the reason why the market's thinking that. And and if they do believe that, again, this is just this last hurrah, run it up as high as we can before the bad stuff hits. But it doesn't matter. Still getting paid. Still, spending. Still going on trips and everything else. I mean, let me know in the comments if you're not, if you change that up. But we're going somewhere next weekend too. I mean, it's the way it is. Our neighbors are going somewhere. Everybody's going somewhere and traveling and paying for services and going to. I went to a restaurant the other night, packed out, waiting list a mile long. So. There's nothing's changed on that. So that's just the way it is. Just the manufacturing side looks terrible. And one reason of that is because, remember, we had a huge glut of inventories, right? So there was no reason to really be ordering stuff. But now those inventories are going to start dwindling down. Supply chains are actually, somewhat getting fixed now that China's coming back open and stuff. So, and another thing to see how it's going to affect our market is they're calling for a bull market, and you can see it on the charts in these emerging markets, right? And it shows you that, how well they're performing. So, there's only so much of a pie to go around. And so if more is going into emerging markets and bonds, how does that affect our stock market as far as how high it can get, right? And so that's something else we got to think about as well. So anyway, let me know in the comments what you think, guys. Hit the like and subscribe button if you get anything out of it. Enjoy the rest of your Sunday, and I will see you tomorrow. Click, buckle up, because it'll be fun. And I was going to say, I almost forgot, do me a favor, because if you can, please, when you click on this video, YouTube did something with the algorithm to change it, and so it's taking away views for nothing we did wrong, just the way they did it with something with the algorithm to change it. So if you could do me a big favor and go on the search button on YouTube and search Mike Jones Investing, just click on a video, let it sit there and watch some of it. That will actually help the channel and kind of get back the views that a lot of us lost just because of this change of the algorithm. I don't know why. So if you could do that, I'd be grateful. I'm really grateful, and would appreciate it very much. Okay. So anyway, see you guys tomorrow.